The screen glows blue in a dark room. Somewhere, a trader sits alone at 3 a.m., staring at a chart that already decided his fate an hour ago. He didn't lose because he lacked a strategy. He didn't lose because he's not smart enough. He lost because in one single moment, he broke a rule he swore he'd never break. That's the part nobody tells you when you start trading. Nobody tells you that the real war isn't against the market. It's against yourself. And in the next few minutes, you're going to understand something that most traders never figure out even after 10 years and a dozen blown accounts. Discipline isn't a nice-to-have skill in trading. It's the entire foundation everything else stands on. Without it, even the best strategy in the world collapses. With it, even an average strategy can build real wealth. Stay with me, because by the end of this, you'll never look at your own trading the same way again. Let's start with what discipline actually is, because most traders get this wrong from day one. They think discipline means white-knuckling your way through every trade, gritting your teeth, forcing yourself to feel calm. That's not discipline. That's suppression, and suppression always breaks eventually. Real discipline is simpler and colder than that. It's doing what your plan says regardless of how you feel in the moment. Motivation is the burst of energy you get after watching an inspiring video, the excitement of a new strategy, the false confidence after 2 winning trades. Motivation is loud, but it fades fast. Discipline doesn't need inspiration. It doesn't care if you're tired, bored, angry, or overconfident. It just executes the plan. And then there's consistency, which is what discipline produces over time. Consistency isn't doing something perfectly once. It's doing the same correct behavior, day after day, even on the days it feels pointless. Think about your last trading week for a second. Be honest with yourself. How many of those decisions came from your plan, and how many came from a feeling you couldn't quite name at the time? Here's why discipline matters more than everything else you've been taught to focus on. More than strategy, more than indicators, more than win rate, more than intelligence, more than experience. A strategy is just a set of instructions. It only works if someone actually follows it precisely, trade after trade, without emotional interference. Indicators only tell you probabilities. They don't tell you what to do when your heart is racing and the trade is moving against you. Win rate means nothing if a trader breaks their risk rules on the one trade that wipes out the last 20 wins. Professional traders survive not because they're right more often than everyone else. They survive because they protect themselves on the trades where they're wrong, and that protection is discipline in action. Now let's actually go inside the brain for a moment, because this isn't just about willpower. There's a real physical reason discipline is so hard to maintain. Your brain runs on 2 competing systems. One is the prefrontal cortex, the rational part that plans, calculates risk, and thinks long-term. The other is the emotional brain, the older, faster part that reacts to threat and reward before logic even has a chance to speak. When a trade moves against you, the emotional brain fires first, flooding you with stress before your rational mind can catch up. That's not weakness. That's biology. The professional trader isn't someone whose emotional brain stays silent. It's someone who's trained the prefrontal cortex to override it again and again until the override becomes automatic. There's also something psychologists call decision fatigue. Every choice you make during the day, what to eat, what to wear, how to respond to an email, drains a limited pool of mental energy. By the time many traders sit down to actually trade, they've already spent that energy on a dozen meaningless decisions, and their ability to follow their own rules is weaker than they realize. This is exactly why professionals simplify everything around their trading. Fewer decisions in the moment means more discipline left when it actually matters. And then there's the habit loop, the same mechanism behind almost every behavior you repeat without thinking. A cue triggers a routine, and the routine produces a reward. For an undisciplined trader, the cue might be boredom. The routine is opening a random trade, and the reward is the temporary relief of doing something instead of waiting. For a disciplined trader, the exact same cue, boredom, triggers a completely different routine, reviewing the journal or stepping away, and the reward becomes a calmer mind instead of a reckless entry. The loop is identical. Only the routine has been rebuilt on purpose. There's one more concept that separates professionals from everyone else, and it might be the most important one in this entire video. It's called delayed gratification. Successful traders are willing to sacrifice today's excitement for tomorrow's consistency. That's the whole idea. Beginners chase quick rewards, the thrill of an instant win, the dopamine hit of a fast trade, the satisfaction of being right immediately. Professionals build long-term habits instead, habits that feel like nothing is happening on any single day, but compound into something enormous over months and years. We live in a world built entirely around instant gratification. Same-day delivery, 10-second videos, instant replies. Everything around us has been engineered to reward speed. The market is one of the few places where that conditioning actually works against you, because the market pays the patient, not the impulsive. Everyone who's ever blown an account had access to the same information as someone who didn't. The difference was never information. It was the willingness to wait for the right moment instead of grabbing the nearest one. Have you ever noticed yourself reaching for the mouse the moment you felt bored, before you even had a real setup? If yes, you're not alone. Most traders never admit this, because it feels less like a strategy failure and more like a personal one. Now, let's talk about why most traders lose their discipline in the first place. Fear is usually the first thing to show up, whispering that you should exit early or avoid a valid setup because you're scared of another loss. Greed shows up right after a win, convincing you the rules don't apply anymore. Impatience creeps in during quiet market hours, making you force trades into existence out of sheer boredom. Dopamine plays a role too. Every winning trade gives your brain a small hit of reward chemistry, and chasing that feeling can slowly turn trading into something closer to gambling than analysis. Stress narrows your thinking, shifting your brain into survival mode, where calculated decisions become nearly impossible. Overconfidence builds quietly after a winning streak. And underneath all of it are emotional decisions made in the heat of the moment that override every rule you wrote in a calm, rational state. Here's a clear way to see the entire problem at once. Picture two traders side by side. The undisciplined trader feels an urge and acts on that urge immediately. He loses, and instead of stopping to understand why, he repeats the exact same pattern the next day, expecting a different result. The disciplined trader plans before the market even opens, executes that plan without renegotiating it mid-trade, accepts the outcome, win or lose, without emotional spiral, and then improves the plan slightly based on what actually happened. One trader is stuck on a loop. The other is on a slow, steady upward curve. Same market, same volatility, completely different outcomes, built entirely from the space between decision and action. Let's look at how a lack of discipline actually destroys trading accounts, because it rarely happens in one dramatic moment. Moving your stop loss because you believe the trade will turn around any second. Overtrading because sitting on your hands feels unbearable. Revenge trading after a loss, trying to win back money from the market as if it owes you something. Breaking position size rules, because this particular setup feels different. Taking random entries based on a gut feeling. Skipping your trading journal, because you already know you made a mistake and don't want to face it in writing. None of these mistakes look catastrophic on their own. One small undisciplined decision rarely blows an account by itself. It's the accumulation, one broken rule normalizing the next, until the account that took months to build disappears in a single bad week. So how do professional traders actually build this in practical terms? A daily routine that runs the same regardless of mood. A trading checklist with specific conditions that must be true before any entry, no exceptions for excitement or fear. Risk management with a fixed percentage decided in advance, never adjusted based on confidence or desperation. Fixed trading hours that protect mental energy instead of burning it on 16 hours of anxious chart watching. Position sizing calculated before entry and never touched again once the trade is live. Regular, honest review of mistakes, treating losses as data rather than failures to hide from. And above everything, rules before emotions, always. Because the moment an exception is allowed once, the brain learns every rule is negotiable. Here's something that changes everything once you actually understand it. The biggest change doesn't happen when you find a better strategy. It happens when you stop asking, "What should I do?" and start asking, "What would a disciplined trader do?" That single shift in the question you ask yourself in the exact moment temptation shows up is called an identity shift. You're no longer trying to force yourself into good behavior through willpower alone. You're becoming someone for whom that behavior is simply normal. A disciplined trader doesn't move his stop-loss, not because he's resisting the urge with gritted teeth, but because that's just not who he is anymore. The moment your identity changes, your habits begin to change automatically. Without the constant internal fight that exhausts most traders long before they ever become consistent. A trader sees gold spike sharply higher, moving without him. Fear of missing out takes over completely, and he jumps into a late entry with no confirmation. The trade stalls almost immediately, and he exits at break-even. Instead of ignoring it, he writes it down and adds one line to his checklist. If I miss the entry, I missed the trade. Missing a trade costs nothing. Chasing one can cost everything. A trader wins 3 trades in a row and starts to feel invincible. On the 4th trade, without any real change in his analysis, he doubles his usual position size. His brain has confused a winning streak with genuine improvement when the market simply favored him for a short stretch. The 4th trade turns against him hard, and he loses more in that single trade than the previous 3 wins combined. Position size should never change based on emotion. It should only change based on rules decided in advance. A trader hits his daily loss limit before lunch. Every instinct screams to keep going, to win back what was lost. This is revenge trading, and underneath it, it's rarely about the money anymore. It's about the ego needing to feel right again. Instead of opening another trade, he closes his laptop and physically leaves the room. He returns the next morning with a clear head and a full account intact. Have you ever broken this exact rule yourself? The one about walking away? If yes, you're not alone. Nearly every serious trader has lived through at least one of these moments, whether they admit it publicly or not. Now, let's look briefly at a few principles from traders who understood this long before any of us were born. Jesse Livermore believed the real profit in trading comes from sitting through a position patiently, because impatience destroys more capital than bad analysis ever does. Mark Douglas taught that the market itself is completely neutral, with no memory of you and no intention to punish you personally. Every loss is simply the cost of operating in an environment defined by uncertainty. Tudor Jones built his entire career around defense first, always protecting his capital before chasing any potential gain. Seykota believed traders unconsciously get exactly what they want from the market, even their losses, because unexamined behavioral patterns quietly run the show. Ray Dalio approached his own mistakes with radical honesty, believing pain combined with genuine reflection is what actually produces progress. Notice something? None of these traders built their careers around chasing excitement. They built them around discipline, around rules followed quietly for years while nobody was watching. Be honest with yourself. Are you chasing excitement, or are you building a career? If you were my younger brother sitting across from me right now, here's exactly what I would tell you, without sugarcoating any of it. Stop searching for a better strategy. That's not your actual problem, and deep down, you probably already know it. What you actually need is to master the process you already have, the one you keep abandoning the moment it produces a losing week. You're adjusting your risk based on how confident you feel about each individual trade, when every trade should carry identical risk regardless of your emotions. You're staring at charts constantly out of fear of missing something, when that behavior isn't dedication, it's anxiety wearing the disguise of hard work. You're entering trades to feel something exciting happen, rather than waiting for your actual setup to appear. And that difference is the line between trading and gambling. Here's what to start doing today. Write your rules down somewhere real, not just in your head, because vague intentions get abandoned the moment things get uncomfortable. Keep a trading journal that tracks not just your wins and losses, but your emotional state before every entry and exit. Within a couple of months, you'll notice a pattern in your worst trades that has almost nothing to do with the market, and everything to do with your own state of mind. Set a daily loss limit and treat it as a hard, non-negotiable stop. And when you inevitably break a rule, because everyone eventually does, resist the urge to spiral into shame. Simply record what happened, understand why it happened, and return to your plan the next day with a clear head instead of a guilty one. Brother, one day you'll realize the market was never testing your strategy. It was testing your discipline. Every losing streak, every winning streak, every boring day, every frustrating day, they were all asking you the exact same quiet question. Can you still follow your rules? The day your answer becomes yes, and stays yes even when nobody's watching, everything starts changing. Not overnight, not dramatically, just one disciplined decision at a time, until one day you look back and realize you've become someone completely different from who you were when you started. Here's the truth I want to leave you with tonight. The market doesn't reward the trader with the best strategy. It rewards the trader who can follow an ordinary strategy with extraordinary discipline. In the next episode, we're going to uncover the invisible psychological trap that quietly destroys more trading accounts than bad strategies ever have. It doesn't begin with a losing trade. It begins with one tiny emotional decision that feels completely harmless until it isn't.